Hi, everybody. We're ready to talk about emerging and mobile payments at retail. And I'll invite our three panelists to join me up here. I have the pleasure of taking you into lunch. And since we're about half an hour behind schedule, I will endeavor not to cause you any more pain than you're suffering right now as you wait to eat. So we'll try to make this as quick and engaging and interactive a conversation as we can. My name is Jason Oxman. I'm the CEO of the Electronic Transactions Association. ETA is the trade association of the payments industry. We're a nonprofit. We're headquartered in Washington, D.C. We've been around for about 25 years, and we represent about 500 companies across the payments and technology ecosystem, including, coincidentally enough, all three of the companies that are on the panel here with you. As everyone here knows, the payments industry is in the midst of a technological revolution, the likes of which we really haven't seen in the 40 years since the advent of the magnetic stripe credit card. Or even before that, you may or may not know that the modern credit card was actually invented right here in New York City in 1950. A guy by the name of Frank McNamara was out to dinner with his wife and a business partner, potential customer, and he forgot his wallet at home. And he was embarrassed because he couldn't pay for the meal for his business colleague. And that gave him the idea to create a card that customers could carry around. It was actually made of cardboard. And that first card was called, he came up with the name, the Diners Club card. So right here in New York City, the modern credit card was born. So we're going to talk about today how the retail industry, which of course is the reason the payments industry was created, is evaluating and looking at all these new forms of payments technology. Everybody has a mobile device in their pocket. In fact, we know here in the US, there are more than 320 million mobile phone subscriptions for about 320 million Americans. So actually more phones than there are people in the US. And those mobile phones, of course, are broadband enabled. And we're looking to a time where every consumer is accustomed to using mobile devices, watches, wearables, other technologies to pay at retail. But of course, that requires two sides of what we call the four-party model to adapt to new technology. It's one thing to ask consumers to change the way they pay, and we're doing that as we migrate to EMV chip cards in the US. We're changing our card technology, but we're also encouraging consumers to use new technologies like mobile devices as well. Now, we all know that's going to happen in the same way that consumers have become accustomed to using their mobile devices for other things that we thought were crazy to use on your phone before the smartphone came to the market in January of 2007 with the advent of the iPhone. We all carry our music collections around on our phones, right? We all use our phones as cameras, as some of you are doing right now, for no apparent reason. Why would you want to take a picture of me while I'm talking? There's no reason for that. We all used to buy digital cameras. Now we use our phones. We use our phones for GPS. We use our phones as computers. We use our phones for a variety of things we never contemplated before. The next step, we're going to be using them to pay. And it's starting to happen. And our panel here today is here to talk about, primarily in the US, but around the world, how retailers make the decision whether to invest in the infrastructure to accept new forms of payment, emerging technologies and mobile technologies. So I'm going to introduce our panelists to you, and I'm going to ask each of them to share with you their thoughts, their perspective from their own observations and the observations of the companies they work for on the question that retailers are asking about that investment in emerging technologies and mobile payments, and how payments at the point of sale are changing here in the US and around the world. Let me introduce our three panelists to you. Ann Sattin is the VP of Marketing, handling digital payments and gift cards marketing at American Express. Next to Ann is Sandeep Malhotra, who is SVP Global Acceptance and Merchant Products at Mastercard. And on the far right, my far right on the panel is Pete Donut, who is an SVP and head of First Data Ventures, I guess is the name of the outfit. Is that right? Pete is joining us from out in Silicon Valley, spending time today at one of his two favorite nationally ranked universities in New York City. The other one being the one your daughter graduated from a little bit south of here on Manhattan Island. I don't think we're allowed to talk about that. So Ann, I'm going to start with you and ask you for your perspective and American Express's perspective. You spend a lot of time focusing on the marketing side and the engagement side of some very interesting products that American Express has gotten into the market on, including Serve, the prepaid product, Bluebird, the partnership with Walmart, other gift cards and products and the like. Talk to us a little bit about your perspective on the consumer engagement with those kind of payments products, and what retailers are thinking about how those products change payments at the point of sale.
Yeah, no problem. So actually, a lot of the conversation that was having around the underserved and previously, be it internationally or here in the U.S., cascades into what American Express is doing, or part of what American Express is doing in the digital payment space. So the products I work on, Bluebird, Serve, these are all prepaid reloadable products. And the feeling is there is 70 million people disenfranchised from a traditional banking community here. And some of these products can really enable them to bank, transact, spend in a much more convenient, low-cost way. And that is what some of the digital payments division at American Express is really working on. So everything from why do you need a bank account, why do you need to have to go to a branch to bank and to deposit your funds, to access your funds, and that is what Serve is doing. So we actually, be it in our partnership with Bluebird or with Walmart for the product Bluebird, or even Serve, work with retailers, tens of thousands of retailers, to distribute our products to people who wouldn't traditionally necessarily be able to access, or should have credit cards and even potentially bank accounts where they're charged enormous fees for having lower balances, et cetera. So the retail space has actually been around for many years in the prepaid space, starting with some of the telco players and prepaid phones, but even gift cards, and it has evolved over the years. So they're pretty enthusiastic to distribute these products to their customers and see the benefits of customers coming back and transacting with them. Some of it's converting cash into a digital form of payment, which is less fraud, less expensive, easier to manage, and some of it is just facilitating payments. So that is some of what we do, specifically in the retail space with our prepaid products. To quickly touch, it's not as much as what I focus on at American Express, but just to represent the company with some of what you were saying about wearables and Apple Pay. American Express has really felt that we want to be in the space where consumers are, and like you were saying, everyone leaves home with their phone. Everyone, even we have a partnership with Jawbone, which has, it's a Fitbit type alternative, and people are going to start swiping with that and going up to the merchant. So we are participating in America, in the U.S. We've been a leader with some of the Apple Pay abroad, and making sure that our products and services, be it the traditional credit charge products, the newer products like prepaid, are all there in those different form factors that are emerging across the world.
Sandeep, you're focused at Mastercard on merchant acceptance, so I want to hear your perspective on the deployment of new technology at the point of sale and how to make the case to merchants and how that case is being received about making that kind of investment. But I also want to hear from you. Mastercard, I think, has a unique focus on this cashless conversation that you're trying to drive around the world, and trying to help consumers and merchants migrate from a cash-based commercial pathway to a more electronics pathway. So talk to us a little bit about how your efforts are focused in that area.
Yeah, sure. So, so if you look at what's happening in the whole industry, and if you go back 5 centuries, the world started, the lot of epic shifts which are happening in this whole space. So in the 15th century, there was a printing revolution. And then 5 centuries later, we moved into this information revolution, which kind of reached an inflection point with this internet era. And then we believe that right now, with what's happening around the world, I think we are at the cusp of another seismic shift, and that's what we call the future of commerce. And it's happening in the developed world, it's happening in the financially excluded parts of the world, it's everywhere. So what it's allowing us to do is it basically allowing more people from more places to do what they want. They want to be able to shop, they want to be able to pay their bills, they want to be able to get benefits, and they want to move up the pyramid. So it's not around just point of sale terminal. I think the world is beyond that. And a lot of that is possible because of advancements in technology. And it all, a lot of that is driven by a much more empowered and an inclusive planet where, you know, the ones who are not a part of the financial stream would like to get an opportunity to be a part of that. And the ones who are a part of that want a better way to basically live their lives. So that's pretty much the premise. Now, what's happening in the world is, you know, and this is not new to you, you know, the world is getting connected. In 1993, there were about 14 million users who were connected to the internet. Right now, there are 3 billion people who are connected, 40% of the world. And now you start looking at all these devices which are coming into picture, you know, the Fitbits, and, you know, the world is beyond those smartphones, you know, the Fitbits, the Ring, even some of the dresses are getting connected, and the cars are getting connected. So the estimation is about 50 billion devices will get digitally connected, and there is an opportunity that each of these connected devices could potentially be a commerce device. And this whole world of physical POS and the digital world, I think there is a convergence going on. I think those walls are blurring. What you would like to do in a POS environment, in a retail environment, in a brick and mortar store, versus what you would do in a digital environment. And digital is fairly broad, basically. You could, digital in my mind is providing a shortcut to what you do, you know. So what you did in 15 steps before, and if you could do it in 3 steps, that's more or less digital payments. So if you could, you know, rather than take out your card, swipe or dip or whatever, sign it or enter the PIN, and if you could just do it with a tap at a device, that would be awesome. Or if you would buy something online, and rather than entering your billing address, shipping address, card number, CVC2, expiration date, and that becomes a 5-step process, and you do that in one click, that basically is one of the digital things. So this explosion of these digitally connected devices is happening, can't be ignored. They all can become the commerce devices. And then basically it comes to, you want to offer technologies in order to enable that, right? Take advantage of the world is getting digitally connected. You want to maybe, you know, offer safe and secure, you know, payment services, because that's what the consumer wants. They want it simple, safe, and smart. The merchants are basically saying, give me something which increases my sales, but reduce the cost. And at the same time, provide me an ability to provide a personalized experience. I want to focus on more of a personalized shopping experience than a payment experience. Because nobody gets up in the morning to basically make a payment. They get up to enjoy their daily lifestyle. They want to, you know, spend time with family or friends, not as much with their coworkers, but they want to enjoy time, you know, going to a movie, shopping, or whatever it is. The payment is the least exciting part. So how do you basically, you know, change that, you know, in the world is one of the things which are happening. So why would adoption to this digital world will happen? I think it's all based on subtle micro experiences which will happen and are happening today. So a couple of examples would be, you know, if you take the Uber example, so digitally connected phone device, you go into an Uber taxi or car or whatever it is, and then when you get down, the transaction happens. There is no anxiety of looking at the meter, and the payment has pretty much become invisible. It's an amazing, you know, invisible payment experience, and it's letting most of these municipal taxi companies think about how do they interact with the consumers. Another one is Starbucks. You go into Starbucks and basically try to, you know, order a coffee. It used to be as simple as a black coffee or milk with sugar. It has become infinitely, you know, complex permutation and combination now. that you could be in Doha in Qatar and you can order a grande latte with 3-pump vanilla with Splenda blended in. You couldn't do that before. And then you pay with your mobile device, right? It is an amazing experience, and all got tied into loyalty experience, which Anne knows more than anybody, on our table. That you tie that with loyalty experience, that to the point that in the last 5 years, about 20% or 25% of all Starbucks, payments or purchases are happening via mobile device. So what this is leading to, this is a small micro experience at Starbucks, which is paving the way for the Apple Pay or Android Pay and Samsung Pay of the world, saying, I paid for my coffee, which was a very, very simple purchase, as simple as it can get, using my mobile device. Now I can go beyond that Starbucks into a Tesco or a Whole Foods or a Walmart and do the same experience. So these summation of these micro experiences are going to lead to the consumer behavior, because you can offer all kinds of technologies in the world. They can be the most safe, most secure, most convenient, but how are you going to drive the consumer behavior? And those are the micro experiences you would basically introduce, which would bring in this change. Now it comes to this thing about why would you as a retailer invest in that? You don't know, and most of the time there is a skepticism around, is blockchain going to happen? Or is that another thing in the cloud, or it's going to evaporate? Or is this these wallets which are out there? There is wallets from everybody. There is Apple Pay, Android Pay, Google Pay, Walmart Pay, Chase Pay. Every day you get up, there is a new pay which is out there. Is that something which is going to be more a sublimation of payments, or is that going to be real? And the retailers are very cautious about that because the margins are thin, and it comes down to do they want to invest in this infrastructure, or do they not? So a lot of them are basically looking into more of a pay-as-you-go model. So invest in this technology in a more of an OpEx model where somebody else pays for the heavy infrastructure, and you utilize that. And if it becomes successful, then you basically try to bring it in-house. So a lot of things said, but basically we're saying a lot of changes happening. I think this is a perfect opportunity with the changing environment, which is elevating both the financially excluded world and also the developed world. The digital and the physical world is converging. Devices and people are getting connected. And then, you have to offer product, services, and solutions, which offers a much more safe, simple, and smart experience to the consumer. And then you participate in that in one of the two ways. Either you invest heavily yourself if you believe in it, or you basically follow a pay-as-you-go model. Sorry.
Pete, First Data has incredible insight into merchants here in the U.S. and around the world. It's the biggest payments company nobody's heard of. You have more than 6 million merchants around the world on the First Data network. You're the largest processor here in the U.S. By far. What's great about having you here, Pete, is you're based out in Silicon Valley. You opened the West Coast office for First Data in order to kind of analyze opportunities in the Silicon Valley payment startups, which was a phrase that didn't exist until just a few years ago. So I'm interested in your perspective. We've heard what the networks are thinking and options that consumers have for technology. What are you seeing in the technology startup space that you like? What are you hearing from your retailer customers about what new technologies they're excited about? How are you looking at investment opportunities, acquisition opportunities for First Data based on these changes in technology?
Only 2 questions, Jason.
Yeah, exactly. Thanks. That was like 6, I think.
Yeah, so First Data, big footprint in the merchant space, both here in the U.S. and around the world. I'll say I've been in the industry 20 years. I end up somewhat schizophrenic in this space. So Sandeep's talking about entering one-click payment technology in an e-commerce transaction. We've been talking about that for 15 years, right? So the world hasn't changed. I still swipe my card for the majority of transactions when we thought we would be dipping things 15 years ago. So in some ways, there's all this innovation happening, and in some ways, payments change very, very slowly. And that's a real conundrum of payments, that you need these network effects. You need the consumers to be there and the merchants to be there. You need to have 2 sides of the axis to make the network effects happen and the chicken and egg issues that we all talk about. So for us, in the merchant side right now, as they're looking at these new technologies, I'd say the Apple Pay, Samsung Pay, the new tokenization things, they've broadly, and you could talk about it broadly and then very micro levels. They're asking the question, should we be adopting this? Is this worth our effort? And usually the first question they're asking, how many consumers are coming in? So they want to know, is there a critical mass of customers that are going to be using new devices, new tokens, new phones? I think we're getting there, but not all merchants are sold that I must do this to be able to participate. Some merchants are also wondering, is the experience changing? So to some of the points Sandeep was talking about, am I doing something that's making this a better experience? And we found some merchants who are doing this really, really well, and some who are doing it, it's, swiping versus tapping really didn't change that much. Some of the great use cases I like to highlight, has anybody used the Exxon Speed Pass yet? Anybody hold up their phone? Adam, what a shocker that you've used it. Great experience. I'm running out of gas near SFO. I go on the app. It says the nearest Exxon station is here. You go up there. I click unlock pump 6 with my phone, and I start pumping gas. Slick, seamless payment happens. The receipt shows up on my phone. I submit it in my expense report. Whatever. It was a great experience. The other one I like to talk about is a little bit of a mixed blessing, one called the Beer House. So this is a real micro one, and I've got a little infatuation with alcohol from Germany. But we created an app, and First Data has this solution called Clover. It's a point-of-sale solution. So it was an in-app solution. So you downloaded the Beer House app, you'd pull down 2 Hefeweizens and 3 Bratwurst, you'd hit order, put your thumb on it, you essentially had ordered and paid at the table. Then you'd have this experience where the server would be seeing the printout in the kitchen of cook 2 Bratwurst, pour 3 Hefeweizens, or whatever the order was, and the server would bring it to your table and had never shown up before at that point. So it had potentially saved that server 8 trips, if you think about the back and forth that may go on in a server's existence in an evening. So it potentially made this whole existence much more of a seamless commerce experience. And this is interesting, we used this as a showcase when Apple Pay launched, a year and a half ago. And the Beer House has actually shut off Apple Pay. And one of the things that happened is it essentially changed too much of the flow of what was going on in the restaurant. So there weren't enough phones that were showing up and ordering stuff. And they actually used to use the way they did the old order process. That is, Pete Donut, if you got in line to order 2 Hefeweizens, if you started to wobble, they could tell that they shouldn't pour them anymore. And that, now if I was sitting there ordering, just putting thumbprints, I could keep ordering. So just to say, if you start to change too much of the merchant infrastructure, and that infrastructure is hard. There's all these POS vendors that range from, the biggest merchants of Walmart down to Pete's Donut Shop. They all have their own policies, practices, and infrastructure, and so changing that to make it a meaningful experience is hard. And they're looking to companies like us to give them guidance, make that a good experience that's slicker, more seamless. And we're looking to find those, and we found some of them, but we haven't found them for some verticals. So some industries like mainline retail hasn't really changed that much, whereas places like Panera, Exxon, everybody talks about Uber. Those have some great new integrated experiences, the way commerce is really seamless and payments is invisible. And thank you for making my job sound like, what did you say? Least nobody cares about payments? Nobody?
Until today. And how much does it matter? We talk about prepaid cards, and we use the word card in there. We talk about credit cards, debit cards, the physical form factor of the card for your purposes when you're marketing these great products and services to even the unbanked. How much does it matter that it's a card, and how much does it change the nature of what the story you're trying to tell to consumers and merchants when we move from a physical card to some other technology?
Yeah. We've kind of touched upon some of this, but the card isn't going away yet. So we've been talking about it for 15 years, and it still is there. So for us, the physical plastic is still a very important part of our equation. So there are digital services that might get more like the checking account, the savings account, and the banking services that are more a part of the digital, in the cloud space. But the card is still very, very much connected. The user experience is incredibly important, and as much as I can spend all day thinking it's really neat that I can just use my thumbprint to make a transaction, there is a question of how complicated is it really to take your wallet out, pull out your card, or pull out your phone with the little wallet on the back of your phone and pull out your card and swipe or dip, exactly. So while I believe that there is a space both for you have to continue to evolve the digital, and if we hang on to the form factor of the card solely, I think we are going to be left in the dust over time. But for right now, we're not at a place where the plastic is immaterial and not something that we're actively talking about. I also think that some of these products and prepaid cards or these wallets are somewhat confusing. We live and breathe it every day, but the customer doesn't. And they know what a card is, and they know what something plastic is, and it makes it real, it makes it tangible, and makes them understand how to use it a bit more easily than trying to explain all the ins and outs in some of these newer technologies. And when you're thinking about going to the masses, it's not, I think that there is kind of a level of experience that we have and complexity that we might understand being professionals in the payment space that they do not have, which the plastic really just transcends that.
And Sandeep, on the subject of the plastic, obviously the payments industry is somewhat involved right now in a minor undertaking of upgrading the nation to chip card capability. We're in the process of replacing 1.2 billion plastic magstripe cards. We're about halfway there. We've got about 600 million cards in market. The nation's 8 million merchants are in the process of upgrading their point of sale technology to accept chip cards with new readers, such as the Clover technology that Pete spoke so eloquently about. Can you talk to us a little bit about the extent to which that migration creates both opportunities and challenges for that point of sale technology conversation that you're trying to have with merchants? Obviously, they need to make the upgrade. Chip card readers, of course, carry with them NFC capability for mobile payments acceptance. But how does that process being underway, this incredibly massive multi-billion-dollar undertaking, fit with the technology upgrade conversation with merchants?
Well, it's fun. So number one thing I think I want to add on is plastic here to stay? Yes, plastic is here to stay. So we conducted a study with a highly paid consulting firm, which told us that by 2020, about 25 to 30% of the transactions will go digital, which means good 70 to 75% of the transaction would still be face-to-face, point of sale, using a physical card, right? So plastic is here to stay for the next foreseeable future. Now, how is the EMV migration going? I think that was one of the largest undertaking in the world, because US was probably one of the few markets which was behind on the EMV migration. It's actually going fairly well. As of today, about 67% of the Mastercard credit cards have been upgraded to EMV. Good 1+, 1.2, 1.3 million merchants have migrated. The prediction is by end of 2017, 98% of the cards will be upgraded. So it's going fairly well. All of the cards which I have in my wallet have been upgraded, so that's a good sign. It's a little bit slower on the merchant side, but it's catching up steam. So what opportunity does it present? So the underlying technology for this, and I won't bore you with the technology, is called EMV. And all it does is it makes the transaction extremely secure. And it's solving for the primary thing of counterfeit cards. That was one of the biggest reasons where fraud was occurring, and you would probably get your card replaced by your bank once or twice a year. It was just an enormous problem. And there was an opportunity around that, good timing, and then everybody, based on the insights we received from consumers, government, merchants, everybody, it was an appropriate time to do the EMV migration. So going well, the fraud on this counterfeit cards is going to disappear. We have seen examples of that. You go to Brazil, fraud dropped by 87%. You go to Canada, 80+%. Malaysia, I mean, Hong Kong, 70+% of fraud on this counterfeit frauds cards have gone away. So it's a good thing. Now, what is EMV, which is basically the basis of these physical, chip which you see on the card and is used for the store transaction? It doesn't just stop there. It's the same technology which is being used for contactless transactions. It's the same technology which is enabling the Apple Pay, the Android Pay, the Samsung Pay, and the other pays. So the underlying technology remains the same, whether you do a dip transaction, which is a contact transaction, or you do a contactless transaction. What we're trying to do is we're taking that same technology up in the cloud. So if you do an online transaction or whatever, the whole idea is to use that same chip level of security into a digital transaction. That is the biggest thing. Obviously for an end consumer, it would just mean a more safer transaction, but it's extremely hard, it's extremely complex. This is one of the biggest things which has happened in the payments industry. And nobody needs to know about that just because it's very, very hard. So that's what we are trying to do. We're taking this EMV introduction at the card level and then introducing that slowly into digital transactions. So that's the biggest opportunity. The pain and the challenges you have to go through any migration, upgrade, or whatever, whether you're upgrading your bathroom, whether you're upgrading, your home, or whether you're upgrading your card or your terminal, it just is a pain, So it's a transitionary period. I think it's going fairly well, and then I think we'll just come out of it just fine.
Pete, let's go back to Silicon Valley. Last year, about 2,000 companies on the angel list that identified themselves as payment startups. There were about 700 global investment M&A transactions in the payments space, of which about 350 of them were here in the U.S. Not surprisingly, the biggest category, about 50 companies in the mobile payments technology. Second biggest category, perhaps surprisingly, Bitcoin digital blockchain transactions. So with all that M&A activity, all that investment activity, can you give us kind of your high-level overview? Where's all the activity focused out there right now? What do you like that you see? And where, looking ahead, 2016, 2017, do you think there'll be a shift in the focus on where these new startups are focused in the payment space?
Yeah, big question. Very interesting space. I think, as you mentioned, Jason, sorry, the microphone kicked in. As you mentioned, the funding is still out there. There's still plenty of innovation going on with really early stage companies. One of the reasons First Data likes to have the venture group is we've got all these big assets, a lot of merchants. We got a couple thousand banks where we are the issuer processor for. Can we take like the small guys, bring them together with our scale and do something unique and creative that makes, 1 + 1 = 3? And that's kind of my goal with the venture group that we have there. But if I look at the best funded startups, and I think I look through the top 100 in the fintech space, and I started to do a mental calculation, I'd say we're going to see half of these guys vanish in the next 18 months. I think there's tough funding environment that's emerging. It's not to say funding isn't gettable, it is, but it is becoming tougher. We're likely to see out in Silicon Valley a lot of down rounds. When you have down rounds, you have other consequences of founders being unhappy and things like that. So I think it'll be a tough year. We'll see some fairly high-profile failures. I think we've seen a couple in the last few months even of some of these well-known fintech guys who are suddenly bankrupt and really didn't have that much of a viable business model. Now that said, I think there still is some really exciting spaces where there's good investment and we're paying a lot of attention. Digital identity is one of those spaces. So we're seeing a lot of companies look at the space as trying to find ways of creating, an identity or an approval mechanism or a way to connect the dots between things that used to be sort of old school and things that are new school and digital. So we like that space. Security is going to continue to be something that is going to be a hot button for all of us. And whether you're dealing with Bitcoin companies, you're dealing with Mastercard, American Express, First Data, we're going to be security conscious and have layers and layers and layers of security to make sure all the payment information is safe and secure. And I think that's a space where there's no way we're not going to be looking for new ways of trying to protect ourselves. So that's important to us. Data and analytics is another one where First data processes about $2 trillion of value. You know, my colleagues here also process a lot. And trying to find ways where we can protect the privacy of our customers, be they consumers or merchants around that data, but also find ways of doing something with it is probably a goal for each of us. And there's a lot of activity and innovation in that space that we like. But if I were to tell you that starting a new payment network is not something where I think there's a whole lot of likelihood of success, and we still see them, you know, somebody trying to be the next PayPal. Might happen. I just think the odds are against them, and the barriers to entry are really, really huge there for a startup to try and scale.
The last one to do it was Discover, right? Which was 25, 30 years ago.
Revolution money. Which Amex
Which we bought.
I think PayPal would be the last.
Very good.
I wouldn't call Rev Money a success on a network.
was an attempt.
It's a payment network.
Exactly.
Well, unfortunately, we do have a hard stop because you all have to get downstairs or upstairs or wherever lunch is. I don't know what floor it's on. It's somewhere. It's just. Where is it, Valerie? It's here in this room. Okay, great. The boxes are there. So what I'm going to encourage everyone to do in lieu of questions. Am I right about that? That people have to get to lunch. That means you're going to cut my head off? What did I do?
Something like that.
That doesn't mean anything. I'm going to encourage everyone to come up and talk to our terrific panelists before you head to get your lunch. Our thanks to Leon for a terrific program as always, and please join me in thanking our terrific panelists for their discussion. And